Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey traders, checking in, and the bulls are keeping their complete control. We had the low of yesterday, 331.18, pretty much a double bottom. We broke it by a few pennies with no follow through, and we closed up at the high. Still no real volume there, but again, as we know, and as I learned in 2017, the S&P 500 does not need volume to go up. And if you don't believe me, go to the weekly time frame, look at 2017, look at the volume just drop off and slowly decline as the price slowly, but rapidly, go up. So, here we are looking at the all-time high as the only level left of resistance. Today was notably the tech sector that saw this strength. And what I've been noticing in the tech sector is since the earnings week, the major earnings week, we used to see the tech sector acting as a unit, and we would say, okay, this name's the strongest, this name's the weakest, but they're all generally doing the same thing. Since earnings, there's been more intersector rotation going on, where we'll have a day where Facebook is clearly weak and Netflix is clearly strong, and then they'll swap out, and there's a lot more shuffling around where some of the major names will be red and solidly red, and some of the major names will be very green. And we've been watching a lot of back and forth action with, it's almost like every day a new individual name is taking the spotlight as far as being the lead tech bull. So we'll be watching the pattern of a higher low every day. This is pretty much the same exact day as Tuesday, where we held the low of the previous day and then had a solid green Marubozu candlestick closing at the high of the day. IWM, also at the COVID highs. Indecision candlestick, but we would have to see a bear break of 152.91 to be looking for a daily higher low to form. And after the bullish action we've seen this week, most names that we're looking at have a lot of space for the daily higher low to form next time we do see consolidation. As far as the next resistance level, 154.20. We did break that today. After that, 155.01, and you can see the lack of resistance, not a ton of previous price levels before we get back up towards no, that's not the all-time high, but back towards pretty much the last major resistance level before the all-time high, which is in the 169s. So just an area with a lack of previous price resistance between 154.20 and the 160s and 170s. So there's QQQ blue sky breakout. And again, the low of yesterday, we held it, keeping up the pattern of a higher low every day for the last 5 days and a very strong close. And again, you'll look at the difference in the week that we've seen on these individual names. We've got Amazon, 2 days of consolidation, daily higher low established on Tuesday, and then now heading back up towards just a couple levels before the all-time high test. Facebook had a few days of consolidation. How about that day today for Facebook? Inside bar bull break, daily higher low, very clearly set, huge volume, blue sky breakout continues. Apple, we know, has been keeping its strength higher low every day over the last 7 days. Blue sky bull. Let's see if Google's going to be a laggard here. Google had the bearish earnings reaction, inside bar bull break. It is still keeping the weekly consolidation healthy. So keep an eye on Google. Netflix set the weekly higher low already. It's had a strong few days. Daily trend changed earlier this week. Tech is strong still, is the bottom line, with some of the names at all-time highs. The healthcare sector is sideways and choppy, which as long as we hold 104.15 is just fine for the bulls. You know, if I'm a SPY bull and I'm looking at this, I'm saying, great. I hope when the tech sector consolidates, the healthcare sector sees its turn take place and sees an all-time high over 107.53. So almost like it's just chilling out, hanging out sideways and waiting for its turn to try and go bullish again. Break of 104.15 would be a short-term red flag, but as long as that holds, the bulls on the daily time frame are just fine. XLF is still looking at our resistance zone. Again, pretty much 24.40 to 24.49. High of yesterday, 24.39. High of today, 24.42. We're right here. Just need that bull break and follow through. And again, same thing. SPY bulls are saying, all right, I hope we see the financial sector break 24.50 when the tech sector needs to consolidate for a daily higher low. Biotech sector, very clear resistance zone here. 115.42, 115.46, 51, 48. That's 4 tops in the last 8 trading days at the same level. 9 trading days. And the bears need more follow through. It is a potential inverse head and shoulders, so we have to be cautious. We know the market's very bullish overall, but this would be the left shoulder. This is the head. This is the right shoulder. And if we pull back for a daily high or low and then change the daily trend, we're looking right back up at the all-time high. So I like the setup here to be bearish the biotech sector if we see broader market weakness. But without that broader market weakness, we're just looking for a daily high or low, anything above 107.69, and then that clear resistance zone that the bulls will have to get over. Semiconductors starting their daily consolidation. It's a potential daily bull flag at this point. No red flags whatsoever. And the VIX still in our channel, bouncing just above this support. And again, the way I draw my trend lines is using the closes in the real bodies of the candlesticks as opposed to the wicks. And that does give it a bit of a falling wedge, tightening, constricting range down here. So something to be keeping an eye on. The dollar is trying for a double bottom, but the bulls are really struggling for any bounce follow through. Need to see a 4-hour trend change by holding 92.52 and breaking 93.09. And if we don't, it's all about 88.25, the most important support level for me. Let's see if the 12-hour is shaping up in a falling wedge. Not enough, not developed enough, but the bear break with a lack of follow through does have us paying attention a bit. Still no offense out of those dollar bulls. Gold, bulls in complete control. Blue sky breakout continues higher low every day. We had one day here where we broke support by $2. Aside from that, it's been a higher low every single day. 15 days in a row. Silver, extremely strong. And the percentage move that silver is seeing comparative to gold is continuing to blow it out of the water. 7% plus from the close of yesterday, as opposed to 1.2%. It's almost like silver is a leveraged version of gold. Very correlated, but a lot more volatility in both directions. In this environment, that volatility is favoring the bulls, of course. It's extremely notable. Look at the SPY close, and the gold and the silver close, and this is what the bull miners did. They're consolidating on the daily. We're looking for a daily higher low compared to 40.96. I talked in the video yesterday how it seems like the bulls are just a little bit jumpy, where the first sign of any little weakness, even if it's just hourly consolidation, they're racing for the exits, it seems like. Again, we're still in a daily uptrend, but the first sign of metals daily consolidation that we see, I'm very curious to see just how much these bull miners do pull back. And I'm still keeping an eye on potential bearish entries. We know the weekly chart is due for consolidation. The daily time frame is not seeing a ton of follow through on the higher highs. Possible daily rising wedge to be watching. Curious to see what this line looks like if I start it back here. More of a channel in that way. Just something I'm keeping an eye on. I like this daily 12-period exponential support as a nice visual guide as well, with multiple higher lows bouncing off that level. I said I was no longer interested looking bearish miners once gold broke bullish from the 4-hour rising wedge. But seeing this 2 days of consolidation with nothing but strength in all of these other factors, still keeping an eye on it. Oil, daily inside bar, if it breaks bearish, we're looking for a daily higher low compared to 38.72. No red flags for bulls there. And natural gas, a little toppy. Daily consolidation underway here as well. A little higher high, but no follow through. And anything above 172 is a daily higher low. Again, there are tons of bear plays and bull plays on every given day based on whatever sector or individual name you're looking at. Today I played OSTK for the first time ever, and I played it bearish maybe 4 different times, and had a very solid day. Got real comfortable with it, so I'm going to be watching OSTK for the rest of the week, one day, but until daily consolidation takes place. And I like the low risk, high reward opportunities. I saw this high volume, volatile candle to start the day, and I said, I'm looking for an entry on the lower high there and just going to top fish the high of the day. So I was watching the 1 minute bounce, entered bearish in the 94s, put my stop over 98, waited for this 1 minute descending triangle to break bearish, and then I was just flipping half positions, locking in half a position, re-entering a 15-minute lower high. Bottom line is just had a lot of fun shorting OSTK, which is still holding on just fine on the daily time frame. And when daily consolidation begins, we can see a very easy 10% pullback. So not the ideal day to be shorting with the overall broader market strength. I always want that broader market wind at my back in whatever direction I'm looking. But I'm still keeping an eye out for the pattern of a higher low every day to break and for daily consolidation to be underway. Again, any bearish position that I take on whatever name I'm looking at, very low risk. It's pretty much just all top fishing plays. All right. Have a good rest of your day, and we will see you next week.